In 2012 March, I want to estimate my next 3 quarters, current year next 3 quarters. How my trend in Q2, Q3, Q4. Then that is called as forecast. When you estimation of current year remaining quarters are called as forecasting. So planning means in the current year, whatever I am estimating for the next year, that is planning. Forecasting means estimation of current year remaining quarters. If you Google forecasting, you might get some other definition. Right? This is the definition I can see wherever I go. Client side, mainly Indian clients. Next we'll discuss budgeting.
What about the foreign clients?
They say like
Is the
suppose
terminology different?
Yeah, terminology different. So suppose next 5 years I want to see my plan data. I want to see my organization growth or profitability next 5 years. They are calling this as forecasting now, but I'm calling it as plan for next 5 years. That is the difference. So it depends. So you have to go to the client and you have to ask what is the terminology, and you have to compare with terminology whatever you know. That's it. Not a big task, this one. So basically we are going with the concepts. So here what I am trying to tell, you can estimate current year remaining periods, you can estimate next year, you can budget for the next year. This is what the terminology might be different in client to client, but this is what we are going to do in the planning side. Now, what is budgeting? Budgeting is something like you have funds in your hand and you are distributing that funds to the lower level according to your plan, right? So it is somewhat we have to discuss detailedly. Let's discuss this thing. To understand budgeting and planning difference, we have to understand what is bottom-up planning and top-down budgeting. Based on that, we can understand what is the difference between planning and budgeting. Let's discuss bottom-up planning. Right. What is bottom-up planning? Simple thing. Now I have some locations in my. I have some organization structure. In that I have some location. Hyderabad is a location. Then Bangalore is a location. Then Control C, Control V. I have something called Chennai. Control C, Control V. So I have something called Vizag. So all South Indian cities. Now this is Hyderabad and Bangalore belongs to some location. So South 1. These two are South 1. And these two are South 2. Chennai and Vizag are South 2. Then these two belongs to somewhere here. This is South. This is the simple South structure I have. Now, Hyderabad estimated their expenses as, for the next year, they estimated their expenses as 10,000, right? And Bangalore, they estimated their expenses as 20,000. Now, South one is estimated their expenses as 40,000. How? 10,000 plus 20,000, that is 30,000, plus South one is having their own expense, that is 10,000. So total 40,000 at South one level, right? Now here South is there. So South has total estimation of budget like 50,000. Why? They have their own expenses 10,000, 40,000 plus 10,000. They have their own expenses like 50,000 they estimated. Now, what South will do, South will send their budget, they will send their planning to region 1. So, region level it will send. Okay. So, they sent that plan data to region 1. So, region 1 what they did, they have analyzed this 50,000, or they know what amount, whatever money they have for the next year. They might have some 1 lakh at region 1 level, and they released only 40,000 to south. So only 50,000 estimated by south as their next year expense, but region 1 released only 40,000, right? So this is whatever you are saying, you are estimating from the lower to upper level, bottom to up, that is called bottom up planning, right? So based on your bottom up planning, top level, some budget will be released. This 40,000 is called budget. This is called budget. Some budget will be released. Then this budget will be distributed to the down level. Suppose 40,000 is my budget. So south is estimated 50,000 and I am giving 40,000. I am muting you all. 40,000 is budget and south is having 40,000 budget. Same thing will be distributed. Now this 40,000 is distributed to south one. Okay. So south one, how much they will get? So there will be a ratio, right? So that percentage will be allocated to south one. Again, whatever amount south one is getting, right? From there, some percentage of amount will be allocated to Hyderabad and Bangalore. That is called top-down budgeting. Top-down budgeting versus top-down budgeting. So let's count. So here I have 40,000. So how much I have to get it here? There should be a formula, right? 40,000 by 50,000 into 100. No. Is it like that? It will not work like that. There will be some formula they are going to use, right? So this is what bottom up planning and top down budgeting. So what is budgeting now? You have funds in hand, and will be distributed to down level. That is budgeting. Then what is rolling forecast? Rolling forecast, we have to discuss some more things here now. So I have a product and time 2012 April 2012 May 2012 June. So I am in 2012 February I forecasted the value for the product 1. So product 1 is X100. I have forecasted the sales as 1000 units, 1100 units, 1200 units. For X200 product, I have forecasted 2000 units, 3000 units, 4000 units. Okay. Now, when I did this one in 2000, sitting in 2012 February, I estimated for April, May, June, that means Q2, this is my sales. Now, I am in 2012 March. 2012 March. So, in 2012 March, okay, I can see some better picture when you compare to February because I have February actuals also with me. So in 2012 March, I decided in February I planned 1000, but I can sell 1100. Here I can sell 1200. Here I can sell 1300. Even in X200 I can sell 2100, 2300. Sales went down. So here 3000. So every month I'm going to revise my forecasted values. I have forecasted some amount, some sales units that will be revised every month. Every month we have to store it in a separate version. That is called rolling forecast. Okay. Forecasted will be forecasted values revised every month. Every month it will change because you will have the actuals of that month. You will get some better picture of your next 3 months or next quarter. So these are the 4 main terminologies in BPC planning, business planning and consolidation, planning side. We discussed top-down budgeting and bottom-up planning. Yeah. Now, so what you can do here in BPC? Okay, BPC planning, using BPC planning, what are the scenarios you can implement? Scenarios can be implemented. As I told you earlier, BPC is very good product for finance planning, right? So these are the scenarios you can implement. First one, expenses. When I say expenses, operational expenses. Yeah. So operational expenses planning can be done. When I say planning, I am saying planning, budgeting, forecasting, rolling forecast, whatever. The 4 things you can do. Operational expenses planning, capex planning. So capital expenditure you can plan. You can plan your projects under this capex. What are the assets you are going to purchase, that you can plan using capex planning. Manpower planning or manpower cost planning. See, When I'm saying manpower cost planning, you can plan the headcount, you can plan the hiring, you can plan the each employee cost, and you can transfer to finance income statement. So manpower cost planning can be done here. Even you can plan the retirement dates of each employee. When you are planning for hiring, you can plan what is the new hire start date, all these things in the manpower cost planning. Then revenue planning. Planning can be done based on quantity or value. Both the things are possible. Quantity or value. Then once revenue planning is done, you can plan income statement. Income statement planning can be done. Even you can plan the cash flow and balance sheet planning, and it is available driver based balance sheet planning. Directly you can plan, or they're based on some drivers you can plan. DSO, days sales outstanding, can be 2 months of revenue, you can say. So based on some drivers, you can plan this balance sheet. These are the typical scenarios which can be handled by BPC. Why I am telling the scenarios, overall scenarios now? Tomorrow, when you go to the client may ask, I want to do the campaign management planning or campaign planning, which is part of CRM. We cannot, it will be difficult in BPC. Yeah, you are asking some questions.
Kiran?
Yeah,
Yeah, I was wondering if you can elaborate little bit on driver-based balance sheet planning, please. Like maybe give a few more examples of what you mean by driver-based planning.
Yeah. Basically, when I say balance sheet, I have assets and liabilities. Assets and liabilities. In the liabilities, I have so many things. Okay. I have to show account receivable. I have to show accounts payable. How can I show accounts receivable? See, account receivable should be calculated based on your revenue. Revenue is already planned here. Okay. So, what will be my account receivable this month? When I plan my revenue, okay, I'm going to plan January I have this much revenue, February this much revenue, but I am going to receive that revenue after 2 months because my period is 2 months. The gap, 2 months due, 2 months what is called credit period. So after 2 months, those revenues are called as account receivable. So that is one driver base. So here to calculate account receivable, what is the driver? 2 months of revenue. Same way you have something called DPO. So this is related to accounts payable. Days payable outstanding. So how many days? The driver is suppose 15 days is the driver. So based on my material expenses or whatever purchases I have done, based on that I have to calculate based this 15 days. Yeah, this I will explain again. Some more drivers are there. We'll discuss later, because now if I discuss it will confuse you.
Okay, thank you.
Kiran, this is Amit. I have one question.
Yeah, Amit.
Can you hear me?
Yeah.
Like what you just mentioned about driver-based, or even, for example, manpower cost planning. Now there are a lot of functionalities which has to be, written.
Yeah.
Probably we'll cover it later. But is it something that is standard available, or you have to develop all the functions?
Yeah, you have to develop.
Okay.
Standards, see, I understood your question. Suppose if you see BW, right? In the BW you have BI content. What does it mean? BI content means there are some standard cubes I can use for my finance or CO or MM. Okay. There is nothing like this here in BPC. You have to develop from the scratch.
Okay, thanks.
Yeah. Okay. So these are the possible
Kiran.
scenarios in BPC. Yeah.
Hi, this is Sundar. I have one question. Maybe since I joined late, my question might have been answered, or I do not know. My question is, say in this BPC planning, can we plan things related to product costing and profitability analysis, which come under controlling?
Okay. Very good question.
Like data extraction from ECC R3, like product costing, profitability analysis, and those which are coming under controlling part.
Yeah, right. Very good question. Yeah. Two things. When we are talking about product costing and profitability, two things are there. The actual profitability, actual product cost, right? So the actual product cost and profitability comes from ECC, as you said. So from the controlling, I am going to load it to data warehousing, that is BW tool. From BW, I am going to load it to BPC. We'll discuss it. We have separate 3 days discussion on this. Okay, just I'm explaining overview. So the actual data is available in BPC now because I have loaded. I can generate reports. What is the based on the data loading. Against that, I can plan what will be my product cost for the next year. See, when I am planning product cost, I know that material should be transferred, value should be transferred from separate planning area. Planning area means planning scenario. And there are so many things are involved. Suppose labor, machine, all these things should be copied from some other scenario. So you can do it. You can do it in BPC. So planning can be done in BPC. BPC actuals should come from ECC. Vivek, am I answered your question?
Okay, thanks. Yeah, thanks. Thank you very much.
Sorry, this is Amit again. I just wanted to extend that same point.
Yeah.
If you do planning for, let's say, product costing, there are components like material price, etc.
Correct.
And typically, you need to have a forecasted price for that.
Mm-hmm.
Can you do that in BPC again, or
Yeah.
for example, frame analysis, moving point, or do you have to build those functions again, or BPC provides some of them?
Yeah, very good question. Here, basically, whether the price will be calculated on some condition or whether the price will be maintained manually. If the price is maintained manually, it is easy. You can maintain it in BPC and you can use it for the calculation. But if you are saying like moving average or whatever, if the calculation is okay with BPC functionality, I mean, you can write some programs in this. So then it will work. So based on the solution we have to go. I can't say like suppose product costing whether it is possible or not. First we have to check total overall solution, whether how many modules are integrated to get this figure. Because if you see if all these modules are involved, again I have to get data from all these modules to BPC. So there is a if there is any gap, it will be a problem. But when you suggest, okay, what I can say, you always suggest for these scenarios. Product cost planning, I can say, I mean, if it is too much integrated, SAP might not, BPC might not support. If simple scenario, they are going to maintain some manually, then it will work. Direct manual intervention. Right. Any other questions?
Kiran.
Yes.
Swami.
Yes, Swami.
So So only related to finance, BP allows, or the customer has a production planning. If
That
you
is,
take, for example, a manufacturing company, so finance and production also. Is it possible to continue with the production planning also?
see, production planning is different. See, the granularity. If you see, production planning is based on my plans and how much products I can manufacture within this next 2 days or next week. Based on that, my supply will be covered. This is separate product we have, right, that is APO. Only APO deals with demand planning or production planning. BPC, you can't do this. BPC is basically for the lowest granularity, you can say month. Okay. My target of BPC is income statement. Okay. I want to see the profitability of my income statement. So revenue, I'm going to plan directly. Suppose 1 month for this product, this month I'm going to get this much money. Okay, I'm not planning anything else like for this, what is the raw materials I have to supply and how much plant hours are required, machine is required. No, I'm not going to do that. Then this will be difficult.
Okay. Okay.
Yeah. Any other questions? Right. Yeah.
Can I have one more question? Sorry.
Yeah. Yeah.
Coming back to your product costing again, let's say, if you are doing a product costing in BPC,
Hmm.
do you still have to do cost center planning in, let's say, ECC, or do you write the data back into there because you have to run product costing there anyway? You know what I'm saying?
Yeah. Understood. See, there are that functionality is there. We call it as retraction. Right? Suppose, for example, if I take operational expenses, right? This goes with cost center wise. But the budget check, whatever budget I'm going to, so the budget, whatever I am planned, that is operational expenses planning in BPC. Now, when I am posting my actual expense, that should that should not exceed my budgeted value, right? So from BPC, I have to send the data back to ECC for the budget control system. That is possible. Retraction is always possible. Even cost center, I can retract the data. Amit, am I answered or I have taken your question wrongly?
No. That's fine. I was just asking that normally in such situation, do you suggest to do it in BPC and then write it back, or you do it in ECC in cost center planning and then you extract into BPC and then fine tune it?
Yeah. If the granularity is like monthly, okay, then you are using a commitment item or GL account for the planning at the cost center level or fund center level. Then you plan it in BPC and retract back it to ECC.
Okay.
Yeah. So next, we have to discuss BPC terminology now. BPC terminology. There are some words here like environment, first one, environment, then model, right. I'm going to discuss BPC 10 terminology first, okay, then I will go with 7.5 terminology. Okay, I don't want to confuse you with the BPC 10 and 7.5 terminology. Okay, first I'm going with 10 terminology, then I will come to 7.5 terminology. So environment, model, dimension, property, member. These are the 5 terminologies required to understand BPC. If you understand these 5, you can easily understand BPC. These are very simple terminology. Like if you know any BW product, any SAP product, I can compare with that product, and so that you can easily understand. Okay, we'll do one thing. Tomorrow we'll discuss these things, like this terminology. Okay. Today you can stop that. Just click on